Hello and welcome to part 2 of our special 2-part episode of Got 5 Minutes with Greg Krasnov. This is Azmeen Ansar, Marketing Manager at CreditLab. And for those of our listeners who missed the first part, Greg Krasnov is the founder and CEO of Tonic Digital Bank. We explored the world of Neobanks in Asia with him in the first part of this podcast. You can find the link for part 1 in the description. Now, without further delay, let's dive into part 2. Let's talk about Tonic. If you can give us a little bit of background story of what's the story behind Tonic and why did you think there was a need for Tonic and especially to kick it off in the Philippines?
Thank you, Azmi. The reason that Tonic developed is that a few years back, when I started looking at the unsecured consumer finance in the region, I realized that the biggest problem was not the how to lend to the customers, because that, I think with CreditLab's support and Flow's support, we've cracked pretty well that it is possible to use alternative data and analytics, digital analytics to make loans very profitable. But the problem is that you cannot scale it because financing is not available. We're not in China, we're not in the US, we don't have banks or insurance companies or pension funds that are readily making money available to the fintech sector. And therefore, if you want to build a business that lends to consumers, you need to develop an organic resource base, what bankers refer to as what they call deposits. Yeah. That's why we launched Tonic, is to marry this opportunity in the deposit space with the opportunity in the lending space. On the deposit side in particular, we see that we can compete very well because of the three things I previously mentioned to you, the user experience, the branding, and the interest rate. The banks in the Philippines offer extremely low interest rates to the consumers and pretty horrific consumer experience in the apps. Philippines also, in terms of market size, is a very large country with a very large deposit base. It's over 180 billion US dollars of retail deposits already in the banking system, and at interest rates of between 0.5% and 1% on average, offered by the large banks. And in terms of lending, Philippines is actually 3 to 4 times behind even Indonesia and Vietnam. Its closest comps in the region on a per capita penetration of unsecured consumer lending. So it's very far behind. It's on the level of Bangladesh and a couple other countries that are not even at similar GDP per capita. So that's in a nutshell the opportunity that we saw, and we moved in and started a conversation with the regulator, and very happy to report that we should be launching in the next 37 days. Fingers crossed.
Talking about the lending part, you mentioned that deposits is one and lending is the second part. How difficult or easy would you say it is for a purely digital bank like Tonic to get started with lending once they hit off and once they hit the ground?
The startup of the lending business is not a problem in and of itself. The problem is how do you make it profitable? Lending is the easiest business to do. All I need to do is have a suitcase of cash, go on a street corner, stand there, and hand out $100 bills. I'll do amazing turnover. I'll never see $1 of it back. In lending business, you can actually get sales very easily. It's not a problem. The problem really is how to get it back and how to make money with it. This is something that I think a lot of people in the region haven't quite realized when the VCs, for example, started investing in consumer lending companies at valuations that were a multiple of their disbursements, which the VCs were using the mental shortcut of price to sales, which is how they value consumer internet companies. But this is not a proper one to use in the credit business. In the credit business, it takes you 6 to 12 months to build a profitable business in which your main cost elements are cost of risk and cost of servicing. And cost of risk, you need to make sure you evaluate the customers properly, and for that, CreditLab solution is a fantastic tool, and that's why we're very excited about partnering with CreditLab, among other partners in the scoring space. Also, with regard to the servicing, you need to build all straight-through processing with fully digital platform in order for unit cost to be very low, because unsecured consumer lending ticket size is very low, so you need to keep the unit cost very low. So if you can crack those two, but it takes you 12 months, sometimes more, to crack those two cost structure elements, and then you can make a very, very profitable business out of lending.
Okay, I think you gave a great segue to my next question, which was about how Tonic and CredoLab are going to be working together. So if you could just expand a little on how Tonic will be using CredolLab's risk assessment solution to deliver, to deliver loans and other services at better rates or better services to their customers.
Yeah, thanks, Esmond. That's a great question. We're very, very excited to partner with CreditLab. I think CreditLab has proven that it has a great solution, and the solution has scaled now across more than 20 countries and into over 100 clients. And it's been an amazing journey to be on together with you guys throughout the last few years as an early investor and co-founder. But I think for us, from Tonic perspective, the solution that you have in the Philippines, you have been using the digital footprint to score clients, with a number of lenders already. So you have a lot of experience in that. And for us, every single customer that we onboard, that customer is onboarded through a digital platform. So actually, we're implementing CreditLab to score every single customer that we onboard. And from the moment that he onboards, and he gives us the permission to analyze the footprint in a confidential metadata fashion that is only used for his credit scoring. But the moment that he onboards, we know if he's a good credit risk or not. So that's for us is a huge boost to our lending business. And that enables us to basically say to the customer, as soon as he's onboarded, hey, we've just pre-qualified you for a loan. Would you like to avail of it? Now that's very different customer acquisition economics than a traditional lender who has to hunt for that customer all over the market.
Great. So to wrap up our two-part episode, what are the goals that Tonic has set for itself in 2021, and how do you see CredoLab? How do you see CreditLab playing a role in helping you achieve them?
So we really have, our main goal is, of course, to come to market with our MVP. We're currently in beta mode, and in the next month, we're expecting to launch into a public production. The public production will be rolling out gradually different functionality. So we'll start with the deposit functionality. By April, May, we expect to introduce the loan functionality as well. And transactions, when I say liability, deposit, I mean also transaction capability. All of it will be rolled out as part of our initial proposition. So effectively for the year, our main objectives are on the liability side of the balance sheet to prove that we can get deposit customers to get good traction with that and can build up a nice liabilities stack to then turn it over and lend. And then on lending, our main goal is to launch the product and start getting the product to a positive unit profitability. So by the end of this year, ideally, I'd like to see us get to positive unit profitability so that in 2022, I can really start accelerating the scale. Because then I know I have a profitable factory that is making money, and all I need to do is feed more money into it to turn it over.
Awesome. Thank you so much again, Greg, for your time and joining us and giving us those incredible insights.
Thank you, Esmond.
To all our listeners, find out more about CredoLab and Tonic's partnership by navigating to the link in the description below. And as usual, keep an eye out for our next episode where we venture into new areas of the fintech space along with our special guest speakers. Until then, take care and stay safe.